While we let folks trickle in, I also want to remind everyone we want to answer questions. We want to be as helpful as possible here. So please do use our chat function to ask any questions, and we will do our best to answer in the chat box, or we'll stop throughout the workshop and address questions and answer questions in front of the entire audience so that everyone can hear some of this important information. So just use that chat box. And with that, I'm going to pass it over to Natalia Abrams, SDCC President and Founder, to get us started here.
Thank you, Cody, and good afternoon, everyone. And thank you for joining our Student Loan Help Clinic. Today, we're going to go over student loan basics, policy updates, repayment plans, and student loan forgiveness, with a strong focus on public service loan forgiveness, because we've been hearing from a lot of you confusion with the new waiver. At the end, we'll share a wonderful online tool that is completely at no charge, that can help you understand your options and actually enroll you and take you to the finish line with these programs. So that's really important. And then we always want to point out that we are advocates and borrowers helping borrowers, but we are not financial counselors or attorneys. But that doesn't mean that we're not here to help. So today, you've heard from myself and Cody. We're the team here at Student Debt Crisis Center. We're also joined by Ian Kuhn with Savvy, who is the representative of that online tool I was just mentioning. And you will learn more about that at the end of this workshop. So just a little bit about us, for those of you that don't know, we really feel that we are borrowers helping borrowers. It's our goal to center the needs and voices of borrowers by partnering with our allies, with government officials, to impact public policy, and once and for all in this crisis that so many of us have been in for decades. It's important that we do something about this $1.7 trillion that we know has been impacting your daily lives of buying a house, starting a family, building businesses, just paying for basic goods. So, we often start these workshops with a national spotlight. This is not to scare you. This is just to show you that you're not alone, and you're not your loan. So, the average student debt per person right now in America is almost $40,000. It's $37,000 per person. We have 45 million borrowers and growing, and that 1.7 trillion number is actually closer to 1.8, and 2 trillion is right around the corner. So something has to be done, and something has to be done quickly. And we know that of that 1.7, that women hold 2/3, more than $1 trillion of the total student loan debt. We also know that so many of you that are joining us today, are of all different age groups. We have been, we know that people over the age of 50 are the fastest growing group of student loan borrowers out there. And most of us that go to college, 70% of us, 70% of recent grads have student loan debt. And how this debt impacts us, we talk about this domino effect, that the negative impact of wealth, that an average 30-year-old has $8,000 less in wealth because of their student loan debt. We know from the National Association of Realtors that student loan debt has been impacting our abilities to buy homes, and more than half of first-time home buyers cite student loan debt as a barrier or harbinger to them doing that. And then also just this financial thin ice that so many of us feel on, that we're hearing from Black and Latinx and borrowers of color that they're more prone to unemployment, especially during times of crisis like we've been in with the COVID-19 pandemic. So we're going to go over loans and updates and the repayment. And then, like I said, we'll get much more in depth for those of you wanting to know about this public service loan forgiveness waiver and how you can properly use the Savvy tool to help you figure that out. So let's go over some basics. So, one of the questions we often get when you all call us asking for help is that many borrowers don't even know what type of loan they have. So apologies to those that do, but this is actually a question we get often. So just so you know, federal loans, all of that information can be found at studentaid.gov. If you don't see your information in studentaid.gov, 99% of the time, that means you have a private loan. Federal loans have fixed interest rates. They have available repayment plans. They have deferment for hardship. They have default rehabilitation, public service loan forgiveness. Private loans don't have any of that. The way to find out if you have a private loan is often on your credit report or just contacting your lender. These are at variable interest rates, very high interest rates. We hear from you all the time of interest rates of 10% or more with private loans, and they are not required to have any repayment plans, hardship deferment, or default rehabilitation. So when in doubt, if you can, exhaust all the federal loans that you can get. But we know so many of you have to get private loans as well. The majority of this workshop, for those that are on, will focus on federal loans because that is where the repayment programs and public service loan forgiveness works into. So the types of federal loans that you probably have are direct loans, Perkins loans, and older loans called federal family education loans. Those are loans that were issued prior to 2010. And we know many of the borrowers on this call have these older loans of FFEL, which does mean you have a federal loan. It's just a different type of federal loan. Here's a snapshot of what studentaid.gov looks like. So you just have an idea of when you go and log in. And then we always like to show you the servicers because people can recognize which type of loan they have when they see the company. And this is changing and we will get into it. So you'll see Navient here. Navient was both a federal and private loan servicer. They are no longer in the federal servicing game. Many of you are going to be moved or have already been notified of going to AA Advantage, my apologies, or Maximus. So that will be changing. But as you can see, just because you have a servicer doesn't necessarily mean it's federal or private because some of these companies manage both federal and private loans. So here's some of the updates. We've had 3 federal loan servicers exit the market. Navient, FedLoan, which does public service loan forgiveness. And we know that that's created a ton of confusion for you all. And Granite State, which was a smaller loan servicer. That means that within the next year, over 16 million loan borrowers are going to be assigned a new loan servicer. You don't have to do anything. You will be notified, but we encourage you to look out for those notifications because they will be telling you who your new servicer is. And then FedLoan Servicing was the sole company for public service loan forgiveness. That is now moving to Mohia. That will be taking over that entire portfolio. So here's what to do. Update your contact information this way to make sure that you get that email when the transfer is taking place. Open your mail and email from these new servicers. Companies like the name Maximus almost sounds like a scam, but it is the new servicer from folks that were with Navient. So make sure to open that communication. We always encourage borrowers, because the system is so messed up, frankly, to save copies of your payment history, have a copy of your account information to make sure everything's accurate after the transfer is complete, and set reminders for yourself so you can be sure to log into the new servicer's website to verify your information. This is especially crucial if payments resume on May 1st, although as advocates, we're working very hard for that not to happen. So how do you find your federal loan? If you're just deciding now that you need to start repaying or this is new to you, we strongly suggest visiting studentaid.gov to access all of this information. Speak with your loan servicer company and find your info on the federal database. I will say we've heard from so many of you the difficulties of talking with your loan servicer, and that's exactly why we brought on Savvy to show you their online tool. So if you don't want to speak with your loan servicer, you can use their tool instead. So for private loans, if there's no info at studentaid.gov, then you want to see if there's a cosigner. You want to check your credit report and then contact that lender servicer. Or sometimes it's been sent over to a collection agency, which could be a third party beyond your private lender. All right, now let's get to the updates for folks of what's been going on through the COVID pandemic. I'm sure many of you are aware of this, but we just want to do a refresh. So, and this has actually not been updated. So payments have been suspended, and we found out just last December, so ignore that January 31st. Payments will right now are set to resume May 1st of 2022. We have not been told this is final. We have not been told there will be a continuation on the extension. I would say it's very wishy-washy right now, but that's important if you want to take action, that now is the time to speak up, share your story, and let the Department of Education and the White House know why you can't have payments turned on yet. And we have been surveying so many of you and know that something like 90% of fully employed student loan borrowers do not feel ready to make payments starting on May 1st or ever. And so we need to keep loans on pause until we cancel student debt. So with this current suspension that we are in until May 1st, all of your time counts towards public service if you've been working full time in your public service job. The time also counts for your income-driven repayment months, and it would count towards default rehabilitation. For defaulted borrowers, tax and Social Security withholdings for federal student loans have been suspended. So if you've had your Social Security withheld or your tax return withheld, that's illegal and should not be happening. And please notify us. This is for federal loans only. For borrowers in default, employers are not supposed to be garnishing your wages. And if they have, you are entitled to refunds. And you should not have been receiving for almost 2 years now any collection calls or letters or harassment from your loan servicer. So let's go over who receives COVID relief, because so much of the time we hear all federal loans are on pause. And if you are one of the borrowers that have not received that, you know it's not true. So most federal loans have been on pause. About 38 million of the 45 million people have received the benefits. It's been federal direct loans and other federally held loans. Commercially held FFEL loans have been excluded from this relief. This is to no fault of your own at all. This had to do with which loans the department bought and didn't buy back in 2010. And I just want to remind you, again, no fault of yours that you ended up being one of these unfortunate people, but we do know that there have been millions of people that have been excluded from relief. So, you know, we hear a lot from people, I have Navient, or this is my servicer, I have a federal loan, why am I still having to make payments? It could be that you have that commercially held FFEL loan. Defaulted FFEL loans have interest and debt collection paused, and unfortunately, private loans have not been eligible for COVID relief. Just real quick, this timeline, but again, it's been extended, so thank goodness for the work of all of you speaking up, the work of advocates. We were able to extend this to May 1st, and we are working hard to continue to extend until they fix the system and cancel student debt. We also want to just tell you about some other important updates. Borrower defense. This is a lot for people that attended for-profit colleges. The Department of Education has announced that they'll cancel over $1 billion for those people that have been scammed from for-profit colleges like ITT Tech and Corinthian colleges. FFEL loans that are in default, the payment pause has been extended to commercially held loans, only the FFEL loans that are in default, not the loans that were in good standing, to just make this issue even more confusing. But if you have been in default, you should not be required to make payments. Borrowers with disability, the department also announced that they are securing additional relief for those borrowers that are permanently and total and permanently disabled. And again, Apologies for not having an updated deck. Things are just moving too fast. The payment pause has been extended till May 1st. So for private loans, we get asked this all the time. I wish we had more help for you, but do check with your private lender to see if there's options available. I will say sometimes private lenders can be more flexible than federal lenders. So it does help in that instance to call your servicer as much as you don't want to. Check the balance and interest rates on your private loans, especially if you have multiple. You might be able to, strategize playing, which loan to pay first. And we always, caution borrowers about refinancing. If you have private loans and refinancing them to other private loans, that's something different, but be very cautious about refinancing your federal loan into a private loan. These are the SoFis and the earnest companies out there, because you'll lose all of the federal benefits that are associated with your loans. So let's get into some standard repayment. This is more to show you, this is incredibly helpful for those that are in public service loan forgiveness to know to pay the smallest amounts until they have their loans forgiven. So that is why we go over repayment information. And we also know that many of you are worried if payments resume, what is out there for me if I can't make that first monthly payment. So but when you first take out your loans, you are put on a standard repayment plan. Standard is in quotes because I don't know if you're like me, but I don't know anyone that's actually paid off their loans in 10 years. So it's kind of a joke that they think that borrowers are able to pay these incredibly high balances in 10 years or less. So that's where many of us start out, but then we get into programs that take much longer. So there are income-driven repayment programs. These are programs that are going to be based off your income versus your overall debt amount. And this can make your loan payments much more affordable. But as you'll see in the upcoming slides, it also lengthens your repayment time greatly. So who benefits from these plans? People that have consistently lower incomes, especially right now if you have lost your job or have had decreased hours during the pandemic. If you currently are unemployed, right now would be a great time to sign up for one of these programs if worst case scenario payments resume on May 1st. And you want to lock in that lower payment and not have to worry about it. And also those people that have been excluded, those FFEL, commercially held borrowers that have been excluded from pandemic relief, this could be helpful to you if you're struggling to make your monthly payments. So I'm not going to go through all these plans, but there are 5 main repayment programs, the newest being Repay and Pay. So revise pay as you earn or pay as you earn. This is again where the Savvy tool comes in handy. You don't have to worry about which program is best for you. Their tool will help you do that. So so will studentaid.gov if you'd like to do it on your own and figure out which plan is best for you. What's important to know is that it's, again, based on your income or your discretionary income, and it's 10% of that would be your payment. So if you make $0, you pay $0. And this is an example of that. So again, if you'd be paying $364 on the standard, this is just a fact pattern for those of you listening on the phone. Let's say you took out $37,000, you'd owe $364. On an income-driven repayment, you pay $0. If you made $25,000, you paid $49 instead of $364. So you can see with this chart how helpful an income-driven repayment program is if you are struggling to make your monthly payments. So how do you enroll in this if this is the first time you're hearing about it? Submit an application through your loan servicer, through Savvy, or through studentaid.gov, enter the repayment plan, and then the big catch with this is that you have to recertify every single year for the 20 or 25 years that you're in the program. During this time, you do add interest. These are not the best. I don't know how to put this properly. I'm trying to, it's not the best program out there, but it's the only program out there right now that the Department of Education offers if you're struggling to make your monthly payments. And one of our goals at Student Debt Crisis Center is we want to avoid people going into default, because that just destroys your credit, is something that's very hard to come back to. So this is a great option if you can't make your monthly payment. If you can, you're better off paying that full amount. And we want to make sure to warn you about scams. I'm sure you've all seen this as borrowers. I see this daily. They're getting worse as we get near these, payments being resumed on May 1st, potentially. So just be very careful with anyone that's calling to tell you about immediate loan forgiveness, or that you have a deadline to enroll in income-driven repayment programs. There are no deadlines. You can enroll at any time. You can change your information at any time. If you enroll when you're making $50,000 a year and then you lose your job a month later, you can recertify at that lower amount. These scams typically involve a loan consolidation or debt, or what they claim to be debt forgiveness for a fee. We have seen borrowers pay upwards of $600 per month and not receive any forgiveness. So just be very careful of these predatory practices of upfront fees claiming to be the Department of Education or promising immediate loan forgiveness. So what do you do if you've encountered the scam, if you're dealing with a terrible loan servicer, if you want to complain about your student loans? Complaints can be shared with the student loan ombudsperson, Bonnie Luttrell, and the website, or I'm sorry, the email address is given here. For folks on the phone, I'll say it once, which is FSA Ombudsman Office at ed, which is ed.gov. And they can help you resolve discrepancies with loan balances and payments, explain loan interest and collection charges, and identify options for resolving your issues. This is also really important if you feel you've been wronged with public service loan forgiveness or wrongfully denied. This is a great place to go to uplift your complaint and hopefully receive action. So just real quick, because we mentioned how much it is our goal not to see any of our supporters and members fall into loan default. Technically, after 1 day, you're past due and delinquent. 90 days is when things start to get scary, because your delinquency is reported to the credit bureaus, and this is when we see things happen to credit reports. And then after 270 days or 9 months, your loans fall into default. With defaults, they can, before the pandemic, or when we resume repayment, or if we resume repayment, loans can, you can have your wages garnished, you can have your tax return garnished, you can have your Social Security or portion of your Social Security garnished. So as we said, when in doubt, these repayment programs are a great substitute for falling into default. These are some older options of extended graduated and extended graduated repayment. We share this because we know a lot of folks, especially with those older FFEL loans, may have been in these programs. It's important to check to see. Most of the time, going into a newer income-driven repayment program can be beneficial. But you always want to look at if you have to consolidate and restart the clock. So it's a case-by-case basis. Then you'll see at the right-hand side of your screen, forbearance, deferment, and consolidation. Forbearance and deferment is, when you call your servicer and say, I'm struggling to make my loan payments, most of the time they'll just say, oh, take a forbearance. Again, you're probably better being in an income-driven repayment program than the interest and compound capitalization interest that happens with forbearance. So, when in doubt, look at the income-driven repayment programs before the options that you see on your screen. So here's a handy-dandy checklist from all the super dense information I just shared. Learn about the repayment plan that works best for you. This is a great place where the Savvy tool is beneficial. Submit your application online. We always say set a reminder of when you did that to recertify next year. I will pause here for a moment to say that things have been so in flux with student loans. We do anticipate changes, hopefully positive to you, the borrower, with income-driven repayment, with things like recertification, but this is where it stands right now. And a reason to follow and continue to join these workshops is that we will always give you the most up-to-date information. So let's pause for a moment and take some questions.
All right, this is Cody jumping back in. I have been answering folks' questions in the chat, but I flagged, I think, a few that are really important. And I want to make sure that we can take some time here to address them. So I heard from Gladys and a few others that they are confused about their income-driven repayment plan. For Gladys, they are saying that their payment, their monthly payment in an income-driven repayment plan used to be $0. Now it's going up to $700, even though Gladys had their income reduced last year. So she's trying to understand what is going on here. I've got some thoughts, but Ian, if you want to jump in here with any thoughts from your perspective at Savvy, and then I'll fill in the gaps with some things that I'm thinking about when it comes to these plans.
Cody, I admittedly didn't quite catch your question. If you want to start.
Yeah, I'll repeat it and I'll jump in first because
Okay.
I think this is really important. So Gladys has an income-driven repayment plan that lowered their monthly payment. And remember, guys, it can be as low as $0 per month. And that's the situation they're in. Yet seeing their monthly payment increase to $700 a month. But they had their income reduced in 2021 during the pandemic. So my first thought that I wanted to share with Gladys and others that are frustrated by their IDR plan is to remind folks that you can recertify your income at any time. And this was really important over the last 2 years because so many people lost their job, had reduced hours, or had some other income disruption during the pandemic. And we had to remind people that, hey, if you lost your job or your income was reduced, submit a new certification form now, and you can lock in a lower monthly payment for the next year. So Gladys, it sounds like you may want to just submit a new income certification, lower your monthly payment based on your lower 2021 income as well. And one other note before you jump in here, Ian, I want to let folks know as well, from what we have heard, borrowers can contact their servicer and recertify their income over the phone now, which could make it easier for a borrower who's had a recent change in their income. They can just do it over the phone as opposed to collecting documentation or tax returns and things like that.
Yep, I definitely agree, Cody, in that recertifying. The other thing we've noticed sometimes with borrowers through the pandemic here is extensions have been the pauses have been extended, I should say, rather, as that some of these servicers have been kind of, trigger happy to start repayment and putting people on plans that they didn't enroll in, or saying, you need to reapply at this date, and then deposit gets extended. So it could be something like that that isn't, I don't want to say actually real, but did not actually take effect yet. So definitely reapply that paperwork now that we have some more 90 days of certainty here.
Several people mentioned something that's really important. A lot of folks asked, do Parent Plus loans fall under the term federal student loans when we're talking about federal loans?
Yeah, so I'll jump in here. Yes, absolutely. We get this a lot when, education loans have taken on the moniker of student loans. But when we say the word student loans, that includes Parent Plus loans, loans that were given to your child, as well as the loans that you have. So yes, Parent Plus loans are federal student loans.
All right, I'm going to take one more question for this segment, and then we should jump into the public service loan forgiveness section of the webinar, because I know that's why a lot of folks are here today. But I saw Shelly's question here, which is, should I or must I recertify my income prior to May 1st when federal student loans are set to resume? So I'm happy to answer that. Or
Yeah, no,
go
I
for it,
mean, I
Natalia.
think both of us, but
Yeah.
I would just say that you do not have to. You would only want to do that if you lost hours or your income has gone down. But that is the new, in upcoming workshops that we'll be doing, we're still awaiting guidance from the department, but there will be a grace period and they will give people time to recertify after payments are turned on. So you do not need to do it right now if your deadline or your date was in February or January, but you may want to do it if you would be paying a lower amount.
Exactly. And I'll just underline that one point that Natalia made. We are waiting to hear more about what the next steps will be for borrowers come May 1st. There will be some grace period. There will be some process for recertifying that will look different than what it has been in the past. This is all the more reason to stay tuned with our organization, to read the emails and letters you get from your servicer and the Department of Education, because unfortunately, we just don't have all the answers yet for what comes on May 1st. So stay tuned on that. But if you are if you're receiving pandemic relief, meaning your payments are on pause, you don't need to do anything related to recertification at this moment. All right, I'm going to pass it off to Ian, who's going to get us started on the public service loan forgiveness section. I'm going to jump in as well and talk about some new important updates that I know a lot of people are asking about. So Ian, take it away from here.
Great, thanks, Cody. Yes, what we've all been waiting for is how do we get rid of these loans? Federal loan forgiveness, the largest of these programs being public service loan forgiveness, has some exciting new changes in that. So we're going to go over historically what the program has been since 2007, some of the issues that have been with the program, all of your advocacy that has brought us to today's period of being able to solve those under this limited period of the PSLF waiver, and then give you some, scenarios, some more information, and takeaways of how to resolve this yourself. All right, so just some background here, so we're all on the same page. Public service loan forgiveness was a program that started in October of 2007. The concept at the time was after making 120 monthly payments while working in public service, that was defined as any government organization, federal, state, local, county, and tribal indigenous nations, other nonprofit organizations, 501c3s, doing that full time, which is over 30 hours per week, while having your student loan, making 120 payments on it, commonly said as 10 years, would forgive your loans at the end of that time. The program was made to help folks that were keeping the economy, keeping the country open, doing these public service jobs that are so necessary for all of us to thrive, but sometimes don't have as great of benefits or pay in order to do that, and still being able to have some economic dignity along the process here. That was the premise of it. We have seen that there are, lots of different eligible employers. So that is not necessarily where some of these issues come into play. These organizations you see on the screen, and I list them off for people on the phone, 501c3 nonprofits could be anything like charitable organizations, nonprofit healthcare. So, most hospitals are, any private schools even, think like liberal arts universities, many times are nonprofits. Obviously, state colleges and universities are also government organizations, then legal aid, anything like that. Many of those 501c3s qualify. Any, kind of government work, it does not matter what role you do there, it's really who signs that paycheck. So anyone from a firefighter to a nurse to the front desk staff to the janitor, all would qualify working at this organization. What came to be is not quite as hopeful. And I'm sure you've read all of the news headlines of, 98% denied, 99% denied, public service loan forgiveness is not working how it should. And that's what has brought us to today in this special public service loan forgiveness waiver period. The new administration has acknowledged those issues historically and are working to rectify them here. So in order to be able to use the program, there's two important big puzzle pieces that come together. So that public service loan forgiveness piece of working in public service and being enrolled in an income-driven repayment plan. Natalia and Cody had some, graphics earlier about repayment plans and timelines. But if we just do some mental math, right, of working for 10 years for a public service, and then also being on that standard plan of ideally, not realistic for many people, paying off that loan in 10 years, it would be the same timeline of you'd pay off all the money by the time that they erase the balance left. So that doesn't quite work out well. So that's how we need to combine both these income-driven repayment plans that have all of those benefits of reducing that monthly payment, being able to balance out debt to income ratios for people. A lot of times that is how folks are able to afford things like mortgages, is using an income-driven repayment plan to show that reduced amount of payment. There's a couple key questions here when we think about public service loan forgiveness that may help you answer and think if you can qualify as well. So first and foremost, do you have a federal loan? At this point in time under the waiver period, we don't need a direct loan. We can convert them, consolidate them to be eligible. So if you have been turned away before for not having a direct loan, you can answer yes to this question for now, as long as it's not a Parent Plus loan still. The next piece is if your employer qualifies. So everything we've gone through about those nonprofits, those government orgs, that's the next big puzzle piece to put together. We also would need to be in a qualifying repayment plan, which is those income-driven repayment plans, right? That's the only way that it makes sure that there's money left over after, those 120 or 10 years to forgive. So you save every month and get a big chunk of change erased at the end. The next is then having to submit employment to say, hey, look, I am working in public service, so we'll have to submit that document. And then after we get to our 120 total, we'll submit again and get those loans erased. All right, so like I've been kind of alluding to here, that is the program in a nutshell. The special time we're in right now is great because while it doesn't necessarily make this process less confusing, it makes it much more welcoming, inclusive, and liberal to many more borrowers. So from last October to this upcoming October, think Halloween this year, you have the opportunity to reapply if you were formerly denied and have those past denials count. So thinking about things like maybe I was a day late making a payment 1 month, formerly that was denied, now they would count that month towards the 120 total. If you were in the wrong repayment plan for a couple years before you figured out and were able to see, oh shoot, they're not counting this, no one told me these details, those months will now count. All sorts of issues like that. Even people had issues with the auto debit. They're only taking out a certain amount of money. So in some months it counted and some months it didn't, because we add or subtract days each month. All sorts of scenarios that were really making this program not live up to its promise of what could and should be on the law. So that is what's got us to today. There are lots of people that can benefit from these new rules. You can count any past payment plan. It doesn't need to just be an income-driven plan. We can count any of these past loans that did not qualify, Perkins loans, FEL loans, etc. Those are now eligible. There are even the ability to count religious institutions and a more liberal look at nonprofit work as well in this. To show you how big this change is, from 2017 up until last October, only about 15,000 people that had applied had been given that forgiveness that was promised to them. That's where that horrible 98, 99% denial rate and news headlines come from. In the past 3 months, there have been 70,000 people that have gotten their loans fully wiped away with these new changes. So this really is transformational. This really is a time to come back, to have some more hope. From one cynic myself to another, this really is a life-changing opportunity for people working in public service. All right, Cody, I'm going to toss it back over to you here to run through some more checklists of what people should do next if they think this might be them.
Awesome. Thank you so much, Ian. I'm seeing a lot of great questions here, so I'm flagging things. We're going to do another Q&A session right after these next two segments, so thank you, everyone. But what Ian has shared with us is one of the biggest changes and biggest wins that we have had for student loan borrowers in a long time. So many of you in here are telling us about the time you served as a healthcare professional, social worker, government employee, right? These critical jobs in our communities that we all depend on with the promise of student loan forgiveness, and the program didn't work for years. So I want you all to know, as I get into this next section, we are going to share a lot of information. It is confusing. There may be roadblocks as well, but I've heard from 2 borrowers this morning alone that have had their loans completely forgiven. So it does work and it can change your life. So we want everyone to be optimistic. We know it's not going to be easy, but this is a real opportunity for folks to have their loans forgiven as they were promised. So I'm going to go through a couple of kind of scenarios of different types of borrowers and what the next steps will look like for you. So if you're someone and you don't know what kind of student loan you have, first, you should go to studentaid.gov. If your student loans are in the studentaid.gov website, then you have federal student loans. And in the past, you had to have a direct federal loan to qualify for public service loan forgiveness, but all of this is changing. So if you find your payment information in the database, that's good news. If you go to studentaid.gov, you'll click on My Aid page, you'll scroll down, it's a very simple page to read, and you'll find a list of all of your loans, including consolidated loans, direct loans, federal family education or FFEL loans, and Perkins loans. All right, now you're someone who has at least one federal loan, but it's not a direct loan. So you will need to submit a consolidation application before the October 31st deadline to be eligible for these new rules. I've already seen a couple of people ask this question. In the past, if you consolidated your loan, you were creating a new loan and you were resetting the clock on your progress towards public service loan forgiveness. That is not the case under these new rules. So I know when I tell you that you should go consolidate, there's going to be some people on this call that are very concerned about that. But you have to do it right now if you want to be eligible for these new rules. In fact, I say right there, Ed or the Department of Education encourages you to consolidate before you submit the PSLF application and use their tools online to find out more about PSLF. Also, we always encourage folks when they're thinking about applying for PSLF, make sure your employer is eligible. You should confirm that you're even eligible as a public service worker before you do any of these steps. Now, another type of borrower is someone who has a direct loan and you have some employment that's already certified, meaning you haven't been working for a public service worker and the Department of Education's already confirmed that that employer qualifies. So if you've already applied for PSLF and you've had some employment certified, the Department of Education is going to automatically award any additional payments that should have qualified without any further action. So I'm hearing from some people whose student loans were automatically forgiven. I'm also just hearing from people who are telling us, I used to have 10 qualifying payments and now I've got 20. So there are some parts of these new rules that are happening automatically without any action, which is great. If you have something in which the Department of Education needs more information, Federal Student Aid or FSA may contact you. So keep an eye out for emails and letters from the Department of Education. Similarly, FSA will contact you to let you know if they've added additional payments towards your qualifying payments for public service loan forgiveness. So communications from department and servicer, your servicer, are really important right now. And lastly, you don't need to do anything until you receive an updated payment count or another piece of communication. So again, there will be some automation here. Once you find out what the new number is for you, that's when you could act. So there'll be some borrowers who may see that they're very close to receiving public service loan forgiveness all of a sudden because they had these new payments added. That will be the time for you to start thinking about submitting an application. All right, if you have a direct loan and you just have never applied, that is totally okay. You can still apply for public service loan forgiveness at any time. So you will want to submit a PSLF form directly to the Department of Education so that they can review your loans under these new rules. And again, at the bottom here, as a reminder, to be part of these new expanded rules, you have to submit your application by October 31st of this year. You can submit your forms through the PSLF help tool, which is studentaid.gov/PSLF. We're also going to talk about the tool that Ian's team at Savvy has created, which makes the process even easier. So there's multiple opportunities for you guys to apply and get this right. And I want to also address my third point here. Because the department expects there to be an influx of applications, they have warned, and I am hearing even from people in the chat right now, that there are delays in the process. So folks are saying that they submit their application, they don't hear back for weeks, maybe even months. That is part of the process. You will want to kind of follow up, stay abreast of what's going on, but expect some delays. And on another note, also for some borrowers, expect there to be some hiccups. I just heard from a borrower today who received a piece of communication from their servicer that said they do not qualify, only to have their student loans forgiven shortly thereafter. So I just want folks to know that if you feel like you qualify and you should be eligible for public service loan forgiveness, even something as much as a denial shouldn't be a roadblock right now. You should apply again because these are the hiccups that are going to happen due to the huge influx and volume of applications. Some borrowers are trying to certify their employment to prove that they qualify for public service loan forgiveness, but they're being denied. So if the Department of Education previously said your employer was not eligible, submit a new form now to receive credit. Some of these processes have been improved. Again, if you work for any government at any level, meaning you could work on the maintenance staff at City Hall, if you are a government employee, you qualify. So submit again, and don't let a blanket denial that you think is wrong prevent you from moving forward. You can find which employers the department has already deemed eligible through their PSLF help tool. Savvy as well has a database that has the names of qualifying employers that can help you make sense of all of this. And I just want to underline, all of these new rules that we're talking about have changed qualifying loans, qualifying repayment plans, but the qualifying employer rules remain the same. So you need to work for a government organization, a 501c3 nonprofit, or a not-for-profit organization that's designated in some other public service role. Now, I just want to quickly touch on a few other options for borrowers that are interested in receiving student debt relief, but do not think they qualify for public service loan forgiveness. There are other programs, and I just don't have time to get into the details of them today, but there's programs for healthcare professionals. There's programs for teachers. Keep in mind, teachers often are eligible for public service loan forgiveness, which is more generous, but there is also a teacher program. There are also other niche forms of cancellation and discharge for people who are disabled, people whose for-profit or predatory schools shut down, people have been defrauded by a school. So there are other opportunities. I wish we could dive into them today, but each one of them is quite complex. So again, this is an opportunity to go to studentaid.gov and learn more about all of the federal programs that are available to student loan borrowers. All right, so here's the checklist as a reminder. You're going to want to confirm that you have a qualifying loan. Remember that under the new rules has been expanded. You're going to want to enroll in a qualifying repayment plan. Again, those rules have been expanded as well. So nearly all of the repayment plans qualify under these new temporary rules. Verify your employer and keep documentation. I understand that this is a 10-year program. You may have multiple employers along the way. And the only way to make sure, to guarantee that this program works is to keep good documentation about your employers. All of this leads you to completing your 120 payments and submitting your application, which again, we're hearing that more people are actually having their applications received and completed, which is really exciting for us. Lastly, we've been saying it throughout the program, and we're about to jump into a little more details, but all of the information we talked about, all of the application process can be done in a more streamlined and easier and free method at our partners website, which is app.buysavvy.com/register/borrowers. I'm going to drop that into the chat for everyone as well. But with that, I'm going to pass it on to Ian to talk about what that tool does for those that are interested in it. And after this segment, we'll get into our last Q&A section as well. So Ian, take it away.
Great, thanks, Cody. Like I said in the chat, this is great news, this period we're in for public service loan forgiveness, but it doesn't necessarily make it easier. And that's why we've teamed up with the folks here at the Student Debt Crisis Center to be able to provide a free, 100% free resource available to you. As a fully optional resource. You don't have to use it. You know, these are federal programs that are free to apply and work with on yourself. As you have seen in the chat and in the narratives and in the news, it doesn't always work how it should. And there's no harm in having someone on your side to help with this process. You know, the same way you have to ask for help to file your taxes, to fix your car when it runs into an issue, to monitor your credit score to make sure it's not taking a ding. Savvy is a similar third-party guide for you. There is no cost because of our partnership together as a social impact company and with some grant funding that we have received. A little bit more about us as a company. We are a public benefit corporation, like I said, with that social mission. That's why we're providing this resource. Together, we have an innovative online tool that runs through all of these programs, rules, regulations, and will, pull up these scenarios and say, you have worked for more than 10 years, let's fill out the right forms. Or you're based on your loan type, you do need to consolidate one more time to work with this PSLF waiver. It knows all of those intricacies like that. And if there were to be a hiccup along the way, we have a whole team of advanced borrower support that you would be able to reach out to as well. And I believe I have a slide on that showing you how to do it, where you can request to say, hey, the Department of Ed gave me back 2 years automatically under this PSLF waiver, but I think I should have much more. And we can take more of a close look at that with a human eye. All right, so just a couple of things that we are able to assist with. If you would like assistance with it, like I said, this is fully optional, but a great resource for people that maybe need some more one-on-one assistance and guidance through the process. Checking all these rules and qualifications for loan forgiveness and teacher loan forgiveness. If you're a K-12 educator, we do both of those. You can run your numbers, see those personalized repayment plans. It'll even show you which one of the 4 IDR plans would be better for you. It'll show you the exact timeline, the exact forgiveness amount you'll get, and when you'll get it. You're able to sign and submit all the paperwork digitally as well. So rather than the alternative would be to have to use, downloading paper forms, faxing them in, not really knowing if they ever got there, if they got applied. That is, such a mess, and we wouldn't have to deal with that. We'll also do annual reminders for you to keep your paperwork and everything in order. On top of that, monitoring for new programs and policy changes. So just like all the, changes that have happened here that we've talked about in this webinar, anyone with their Savvy account that's free to them will get up-to-date instant information about that. When payment pauses are extended, when servicers are transferred, all of that, to remind you to say, hey, your loans are going to get moved. You should download your documents so that you always have your payment history saved offline. That would be an example of that. And that whole team of student loan experts to be able to assist as needed as well. So lots of great resources here for you as a supporter of Student Debt Crisis Center. If you're ready to give it a shot here and dive in and need help with some of these great rules, or great new rules, I should say, from the Department of Education, the link in the chat is available here to go ahead and register and make your free account. We'll have Cody put that in there. There is, again, no fee for making an account, for using our assistance. It is 100% social impact funded. So once we get logged in on the next screen here, you can see we land at the student loan kind of dashboard control center, as we call it. You can see all sorts of features here, like loans from private and federal servicers in one spot. It'll show you how many PSLF credits we have detected that you have, and compare them to how many, for example, FedLoan has certified and say are approved. That discrepancy point is where we will go to fight on your behalf. I know Natalia mentioned that earlier of having a lot of friction between servicers, having to do wait calls, not hearing back from them. That's a great example of what we're able to assist with, of being that kind of middleman. To say you should have 119 credits, but they're only counting 100, and we will get the 19 for you. Let's try. As we go on to some of the other features here in the next slide, it's going to look more like a questionnaire, just like, think online tax software where you answer some questions when you get started so that they can give you the most money back on your tax refund. Very, close to identical on your student loan debt. So every question in here will help make sure that we get you the income-driven plan that has the lowest amount monthly, the most forgiveness at the end of the journey, the fastest to get it paid off. You'll see all of those options available to you by answering a couple of these questions. On the next slide, then, we'll see that once we answer some of those questions, we are going to sync with Plaid. So if you have a Venmo account, any online banking account, it is the same service and tool that's used pretty much across the internet for syncing online financial data. So again, you don't need to go and dig out years and years of documents or anything like that to say, type in your payment history every month. It will grab this for you digitally. Logging in with your servicer credentials, FedLoan, Navient, Mohila, etc., will automatically grab a read-only safe snapshot of that. So we can say, all right, you told us you worked in public service for 20 years and we've made payments on our loans, on and off throughout those years. How many credits, how many 120 do we have that match up, overlap each other on that timeline? That's what this process does. That would be very tedious for like a financial advisor to do, for a bank to do, for someone to do for you. It does that timeline qualification matching for you behind the scenes. And at the end of the process, then it will show you what all of your options are on the next screen. So you can see in this example, it has, I believe it's kind of small, but that looks like there's 3 or 4 options. We can see in this example, we are going to pay $123 a month versus closer to $300 when we started. There's 5 years left until our loans are gone, and we're going to get $14,000 in forgiveness. This is, a pretty low estimate compared to many. You at that point are able to say, all right, sounds great. That's about what I was thinking. So far I've worked 4 years in this example. So 5 or 6 left makes sense to me. Hit continue, fill out the paperwork, send it digitally, and you'll always know where it's at. That home screen has, little notifications, so you get to see when it's been sent to the servicer, if they have questions, if we need to get the email and phone number for a past employer, if they need to sign a form to say, yes, John Doe did work here from these days, I will sign this. We help with all of that tediousness. All right. And like I said, if you do run into trouble along the way at any point, there are options to reach out to us. We have a whole help center of articles that are written in, plain language, not Department of Ed bureaucratic speak, that are maybe more helpful of how to describe these scenarios. And you're welcome to send a message to our support team at any point in time. And all of that is available to you at no cost as a thank you for being a supporter of the Student Debt Crisis Center and fighting for student borrowers together. All right, I'm going to hand it back over to you, Natalia and Cody, to take some of the questions in the chat and close us out.
Awesome. Yeah, thank you, Ian, for that. Just a reminder, I'm going to drop into the chat one more time here the link to the Savvy tool. And to be clear, we brought Savvy into our network with our borrowers because we recognize that when we teach people about these programs and we send them back out into the ether, they could be taken advantage of by or misled by their loan servicer. So the Savvy tool is really here just to help kind of complete the process so that when we teach you about something, we also can help you enroll and apply for these things. So I'll put the link in the chat, and please, feel free to visit their site and take advantage of that tool. In the meantime, I have tons of questions from folks who have been on the call. So thank you guys for sharing your questions. Let's dive in real quick. I saw one that just popped up that I think is really important, but borrowers have been asking, does time spent in deferment or forbearance, which means that your payments have been on pause, count towards public service loan forgiveness, especially under these new expanded rules?
So it's the time spent in active repayment, but the one caveat I will mention is if you have been part of, some people are referring to this payment pause as a forbearance. So if you've been working in your public service job, but you've not been making payments because your loans are on the federal loan pause that's going on for COVID, that time does count. But previous deferments or forbearances do not.
Yeah, just to be clear there, I go to my account on Great Lakes servicing website and it says that I'm in what's called administrative forbearance. That is kind of the technical name for the pandemic relief. That would count. Before the pandemic, you could call your lender or your servicer and say, I can't afford my payments, and put them on pause through deferment or forbearance. Those options wouldn't count. And so to be clear, the expanded rules for public service loan forgiveness mean that your repayment programs, any of the repayment programs, which includes now extended repayment, graduated repayment, and other repayment plans that didn't qualify, those count because you're actively in repayment. The pauses like deferment and forbearance do not. All right, I am also hearing from a lot of folks that they have submitted their application for public service loan forgiveness, or they've submitted their employment certification forms and they haven't heard back from FedLoan or the Department of Education. They don't know what to do. Ian, are you hearing about this these kind of issues or delays happening right now?
Yes, there are tons of delays sprinkled all throughout the system. Unfortunately, like we kind of said earlier, they are processing 70,000 people in 3 months, but only did 17,000 in the matter of over 4 years. So it is a lot, and they are working quickly. But the influx right away has been challenging, I know. It's also made it that people are falling through the cracks as they're trying to rush to get everyone, fitted in this 1 year. So yeah, I would say be patient, but also be diligent. Especially in working with someone like Savvy. Like I said, that homepage website will tell you and say if we've sent it to the servicer, if it's still with us, if we have questions back, so you always know who to appropriately harass along this process to make sure it gets applied correctly.
And just to reiterate something Cody said earlier, we've heard, it was actually from 2 separate borrowers today that had been previously told by FedLoan that they were denied. This is with the new waiver, only to find out that their debt was going to be completely forgiven. So if you, firmly believe that you've been in the correct job, the correct repayment programs, or, this waiver is for you, please contact us if you've been denied and think you should not have been, because there's still hope out there for folks. It will take a while and it is very frustrating.
Yeah, Definitely frustrating, but not rare, not unique,
Absolutely.
unfortunately.
I want to point out something that Patricia just dropped into the chat, and I think this is something that I want to be clear about, and also just save space to just talk about this real quickly. To be clear, the PSLF rules, these new extended rules, which has been called the waiver, is temporary, meaning borrowers have to apply before October 31st. Patricia was saying, can we lobby to extend these rules? SDCC is an advocacy group. We organize our supporters to push for reforms. That is at the top of our agenda, along with other important things like debt cancellation. So we will certainly be trying to extend and make these rules permanent. But as it stands right now, you have to have this application submitted by October 31st. And let me clarify that as well, because there's a lot of confusion. That doesn't mean you can't apply for public service loan forgiveness after October. The program will still exist. It's just that these new rules that have made it easier to qualify are only going to be around until October of this year. Okay, lots of great questions here. Another borrower said that they have worked in public service for 19 years and they submitted an application prior that was denied because they were in the quote, wrong repayment plan. So Ian, can we address for those that have been told that the repayment plan was wrong? Can we clarify how these new rules may change that and why they should apply again?
Yeah, definitely. Like I said, historically, there have been wrong payment plans. That's why they even made TEPSLF back in 2018, was for those wrong payment plans of extended and graduated. Now, any payment plan has counted. So if you are making payments on your student loans and working in public service at the same time, that month should count. So that's why I was saying, we need to have some hope in this time, reapply again, and do that. Some borrowers have gotten this automatically because they had enough paperwork filed. Some people just need to consolidate to convert that one last loan that might be an old loan type to be eligible. Some people might just need to submit one more employment form from way back. We don't even know that the Department of Ed has lost along the way. So there are very different, circumstances for each. So it does not hurt to reapply fully for the program again, to have that fresh look under these new rules.
All right, I've got a question here from a few folks who worked for more than 10 years in public service, and now they're retired. And they want to know if these new rules will make them eligible for public service loan forgiveness. I'm happy to jump in here because I answered a few of these. So previously, the standard public service loan forgiveness rules would say that you needed to still work for a qualifying employer when you applied and when you receive loan forgiveness. What this meant, though, was that somebody who worked 10 years of public service after the program started could have retired, after 12 years, 2 extra years, could have retired, submitted an application, and not gotten the relief that they thought they were eligible for. This new waiver, these new rules that end in October, have changed that. So if you are someone who worked for 10 years in public service after October of 2007, when the program started, and you retired recently, but you have that 10 years of service under your belt, you can qualify under these new rules, and you certainly should apply. And so that's a really important change that's now made it more inclusive and also fulfills that promise of debt forgiveness for people who have served their community. And we're really excited about that rule. Ian, I see a few folks here that are confused about the consolidation aspect, and maybe you can help clarify, but people are not sure, like, if they're told to consolidate to qualify under these new rules, like, should they do that? A lot of them are telling me, including Rita, who asked this question, that they're kind of afraid to do so because they don't want to mess up their ability to qualify for public service loan forgiveness.
Yes, that is a great flag. And sorry, there's so many details here that it's hard to even fill them all in 1 hour. Consolidation, first and foremost, is a free federal program. It is different than refinancing that turns those loans private. Refinancing we want to be wary of. Consolidation is generally very okay. There's often not very many consequences, if any at all, for consolidating. It basically, I like to think of it as the consolidation machine. So we put something in and it's going to spit something back out. So in short, what it does, you can put multiple loan types into the consolidation machine. It has, the algorithms and math of payments and interest rates and everything, combines those all together and will spit out one loan. That's the consolidating piece of it. What we use consolidation for the most in public service loan forgiveness is that those old loans that are ineligible or deemed ineligible need to be converted into a new direct loan. So when we put whatever loans we want to put into the consolidation machine, it spits out one new loan, and the keyword there is new, which means direct and is eligible. That is why people are being maybe pushed to consolidate, is because the department is still requiring that people have direct loans to apply for these public service loan forgiveness programs, even during the waiver. The other thing to note is that historically, that consolidation process did wipe away any progress you might have made on that loan. So an example would be, making 5 years of payments on the wrong type of loan, on a FFEL loan, and then realizing that we need to switch it to a direct. We'd have to consolidate that, and that would wipe away those 5 years of progress. It wouldn't wipe away 5 years of payments. The dollars would stick, but at that point they would have maybe 60 credits towards the 120 total of that 10-year, promise. That would historically have been started back at 0. Right now, during this waiver period, that is not the case. They are retroactively keeping all of that progress when consolidating. So during the waiver period, that's the huge part of how people are getting all of this forgiven, because that loan type was a big issue. When the program started, they didn't even really have direct loans. So quite awry to require a loan type that wasn't even very popular when the program existed. And that's what we're reconciling with right now.
You're absolutely right, Ian. I believe it's something like less than 18% of loans in 2007, when the program started, were direct loans. So this is something that advocates could see coming from a mile away. The waiver is a great start, but as Cody said, we have to fight to make this permanent. There's a lot to do as advocates in this space, fighting to get debt canceled, fighting to get the payments extended, and definitely making sure that the PSLF waiver stays intact. So I think we have time for one more question.
Yeah, I have a question here, and I'm not sure that we covered it clearly, so I think this is important. But Tiana was asking if you have to work for one qualifying employer, or if you can combine multiple public service jobs to reach your 120 qualifying months. And that's a really important aspect here. So Ian, feel free to jump in here if you are working with borrowers that have this type of employment history.
I'll let you take a first stab.
Yeah, so Tiana, the great news is that PSLF in every way is cumulative, not consecutive. So there are borrowers that have met their 120 qualifying payments while working for a qualifying employer in more than 120 months, meaning maybe they worked in public service, then they went to a private sector job, and they came back to work in a public service job. All that matters is that you can combine all of your service together for that 10 years or 120 months. So that's a really important detail, because I know that there's many people work in public service who are either changing jobs often due to the nature of their job, or I know traveling nurses that are often working in multiple jobs that all qualify. So those details are really important. Okay, with that, we're going to wrap up today's clinic. I just want to let folks know that tomorrow you'll get an automated email from our Zoom account that will send resources, links to the Savvy tool, and other helpful tips that I hope will answer any questions that we didn't have time for today. So with that, thank you, Ian and the Savvy team for joining us as well, and thanks to the several hundred people who joined us today. It's been great.